New year and new questions about our economic outlook. Is a recession probable? Will the Fed keep hiking interest rates? Will wages continue to lag inflation? Financial analyst Bruce Allen reviewed the economic forecast from the top economists on Wall Street, and he's joining us now to break it all down. Thank you for coming in.
Good morning. How are you?
So what's the outlook for 2023?
I think the first question we need to address head on is the fact that the U.S. economy, if it's not already in one, will be in a recession sometime in the first half of 2023. The bond market's been predicting a recession since last July, and the predictive or leading economic indicators have been getting negative now for the past several months. So the economy, if it's not already in a recession, will be in a recession in 2023, no question about it.
What does it look like for interest rates?
Interest rates, the Federal Reserve has committed that they're going to raise rates 2 more times, and the estimates are, that these are guesstimates or estimates, right, that the Federal Reserve will raise rates another 1/4 percentage point at the end of January, 1st of February, the first Federal Reserve meeting. They'll raise rates by 1/4 percentage point. And then in the 3rd week of March, they'll raise them another 1/4 percentage point. And it looks like they may stand pat after that. But in the first 90 days of this year, we're going to see rates go from 4.5% at the upper end of the Fed funds range to 5%.
And that makes a big difference.
And I think at that point, it looks like the estimates are that they're going to be holding steady to see how these interest rates are going to filter through to the economy.
What areas will be most negatively affected?
Each recession has a different tenor, if you will, and some areas are affected negatively more than others. In this recession, the interest rate increases are already starting to show up as a negative for the housing market. We're going to see housing sales are going to be down between 14 and 15%. That's the best guess. And the other piece is that unemployment, which is starting at a very low rate. We have a very robust labor market. Unemployment right now is around 3.7%, a little over 3.5%. And by the end of 2023 and into 2024, it'll be somewhere between 4.5% and 5%. The jobs market, Corey, is about 160 million people. So that means that roughly 1.6 to 2 million people will lose their jobs in this recession. And while that sounds significant, and it is, it's not nearly as bad as some of the past recessions we've had in the past 20 years, where we've seen unemployment get up to 10, 14%.
That's why Jordan always kind of asks you, is this a recession with a big R or a little r?
This is a little r, we hope. I'm hopeful that this is a little r.
Okay, last question. What areas will be spared?
There's a couple of things. One is that the inflation that we saw in 2022, it's likely to come down significantly. We saw inflation rates at roughly 8% last year, which is the highest rates of inflation we've seen in 40 years. The inflation numbers seem to be coming down, and it's likely that in 2023, the best guess is that we'll see inflation running around 4%. And a lot of the things that individuals saw that were really jumping in price in 2022, we're going to see those start to calm down. We've already seen the price of gasoline and some other things come down. The second piece is that while inflation may come back down to around 4%, it's likely that wage increases will still be pretty robust. We may see 4+% rates increases in what people get paid in the U.S. And so we see that, hopefully that will pan out so that people will continue to be able to move through this recession without too much pain.
That is a bit of good news there. All right, Bruce, thank you so much for coming in. Appreciate it.